banks have begun to offer more integration to fintech companies. And so even though we're seeing a lot of big players coming through the fintech space, like Yoko, for example, or companies like Time Bank or Bank X or 10X Investments or whatever, the banks have become a little bit more smarter in how to deal with these, and are saying more like, well, look, if we can't beat them, let's join them. That's the approach I think banks are taking. Now, what that has is a direct impact on a bank's offering and its costing. So you might find, for example, a bank might say, well, look, right, we don't need to be in the space at all. We've got a company that does this way more effectively and for more cheaply than for what we can offer. And the big reason of cost is that a bank has a lot of legacy infrastructure and systems, which would invest in quite heavily over a number of years. They're not able to offer the same costing as a brand new fintech, whereas their staff and new technology and can offer a much cheaper service to that consumer than what a bank can do. The second impact which a bank will do is they'll say, well, fine, look, we're happy for that fintech to offer that service. What we will do is we won't compete against it. We'll just buy half of it, or we'll buy 3/4 of it. So they'll invest into that fintech. Now they own that fintech, right? So in effect, you might see a different brand altogether, but will form part of a bank's group. And so banks are quite smart when it comes to that regard. One of the other impacts it'll have is that because fintechs come to the market and they disrupt, it forces change out of a particular industry or service offering, and so you might find the cost of those services comes down quite heavily. So there's a lot of good impact coming as a result of fintechs, but then being in a bank or working in a bank, you might say, well, actually, hang on a bit, a bank might have closed 30 or 40 branches in the past 2 years, right? And maybe as either repurposed or retrenched staff or something like that. And so there could be some negative impacts to the bank itself, but to the end consumer, to the client, I think there's a lot of positives to take out of this. There's more choice. There's more flexibility for you as a consumer. And so I think there's a lot of good things coming from the fintech space at the moment, and the banks are definitely jumping on the bandwagon to expand this.
Fantastic. This episode was powered by Futech.io. We take the guesswork out of decision making by matching buyers and sellers in an easy way. Join our community. Africa is the fastest and biggest growing market. Become one of the pioneers in doing business in Africa. Whether you're out of Africa or looking to expand in Africa, Futech.io, join the community and let's change Africa. Thank you so much. Take care. Till next time. This episode was powered by Futech.io. We take the guesswork out of decision making by matching buyers and sellers in an easy way. Join our community. Africa is the fastest and biggest growing market. Become one of the pioneers in doing business in Africa. Whether you're out of Africa or looking to expand in Africa, Futech.io, join the community and let's change Africa. Thank you so much. Take care. Till next time.